John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. I am a consumer credit expert. I've got almost 30 years of experience in the credit industry. I've spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the 3 credit bureaus in the United States. So today, I'm going to address a question that I get periodically about mortgage loans and whether or not it's better to get a mortgage loan from a bank or a credit union. So this is an interesting question. I've actually I've had a lot of mortgages in my life. I mean, I'm an older gentleman, and so I've had the opportunity to move around a lot in my time and buy a lot of houses and sell a lot of houses. And so I've got a lot of experience in this bank versus credit union, this choice of financing sources. So just kind of give you kind of a high level understanding of how this all works. The interest rates on mortgage loans, you probably have seen advertisements from mortgage lenders. Mortgage rates are at or near historic lows. Mortgage rates have been going down since the 1980s. And they've been low really since the 1980s. And so all this stuff about how mortgage rates are at their historic lows, they've been at historic lows for decades. And so it's kind of a little bit of a marketing magic that they're trying to play on you. They're not really any materially different today than they were, X number of years ago. But having said that, the rates are great. It's a great time to buy a house because it's so cheap to borrow money to buy a home. So if you are looking for a mortgage loan and you're trying to choose between your bank or a credit union, that's fine. I would also suggest that you throw in a mortgage broker as an option, because what a mortgage broker can do is they can kind of give you an idea of what kind of deals you may get across a variety of lenders, and you'll have more options, right? So they're brokering out your application. Essentially, I know that's not exactly what happens, but essentially they're brokering out the deal to multiple lenders and trying to see which one gives you the best deal, and then you can decide, if you want to go with them or look at another option. The cost associated with getting a loan, they vary over time. So right now, where everybody's applying for loans, there are some costs involved. They're called closing costs, and there's other fees and such. And those are all disclosed to you. There's no secret. So you're knowing exactly how much you're going to pay. Credit unions are nonprofit. And so there are some scenarios where you may actually not have to pay some of the fees because the credit union is nonprofit versus a bank, which is a for-profit entity, where you would have to pay those. So certainly there's a possibility that you may save a few bucks there. Having said that, if you get a better APR, or better interest rate on a mortgage loan from a bank than you would on a credit union, that's obviously a better deal, because most mortgage loans are hundreds of thousands of dollars, if not more. And once you spread that out over time, having a lower interest rate is going to eventually catch back up to you paying lower fees at your closing. So it's actually cheaper in the long run to choose the bank versus the credit union, if that's how the numbers work out. Normally what happens is you go and you apply, and all 3 of your credit reports are going to be pulled and 3 of your scores are going to be pulled, and the lender is going to make the decision based on the middle numeric score of your 3 scores. And if you have a co-applicant, it's going to be based on the lower of the middle numeric of the scores. And so if you have 700, 710, 720, they're going to base it off of your 710. If you have a co-applicant that's 690, 695, and 700, they're going to base it off the 695. And so that's, there's going to be 6 scores, and the decision is based off of one of them. So that's something to keep in mind, that if you are bringing a co-applicant with you, you might want to make sure that it's a strong co-applicant. If you do not need a co-applicant to apply for the mortgage and you've got good credit already, then it may be unnecessary for you to try to bring someone else onto the loan, because there's just no practical benefit of you doing so. So, like I said, it's, for mortgages, it really is all about the cost associated with it. The better interest rate is usually going to be the better option. If the interest rate is identical and the fees associated with it are really going to be kind of the tipping point between your decision between a bank or a credit union, then you may get some better deals on a nonprofit because of the credit union nonprofit status. But ultimately, you're going to want to do your shopping around. Don't make a knee-jerk decision. What worked out really well for someone else may not necessarily work out well for you because you may have a different credit quality, you may have a different income, you may have a different loan to value on the home that you're looking at. It may not be worth the same amount of money. So there's a lot of moving parts in a mortgage loan that don't necessarily exist in, say, credit cards and auto loans. So that's going to be something that you're going to want to take a lot of time to compare the costs. So if you have any other questions, then please drop them in the section below. Thank you very much for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.